following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 17th day of Feb. My pleasure to be here Monday through Friday. Of course, Monday will be a holiday. We won't be here. So let's take a little time here and do the nitty-gritties. Let's look at the Dow. The Dow's down 60 at 20,559. The E-mini is down 6 at 2339.50. Now let me show you something very interesting. On the left is the daily chart. It's gone to a peak D by yesterday's lower high bar below the 2351.50 level of the 15th. The MACD is still very strong. Stochastics at 95%, very strong. On-balance volume has reversed down sharply. A couple of things are going on here. One of the reasons why, for the first time in a while, we're actually taking a short position on the index based purely on a Chapman Wave 5 reading. Let me explain what I'm looking at. Having gone to this extension in a leg D to the upside, all it would take is a piercing of the 2351.50 level to go to somewhere around 2353 to suggest that right in this particular phase, the consolidation is going to be very brief. And there's going to be an extension to the upside. But everything about the work that I'm doing suggests to me that there's a very strong likelihood that at least a sideways to down consolidation is going to take place in the shorter term, based on the number of charts that have gone in their daily charts to D or an E. So look at the 120-minute chart. We've got a 5 here as well. And it went to a peak G at 2351. It extended that leg to the upside, pulled back sharply from the 2351 area to 2336, made an arch formation. In the Chapman Wave methodology, the CD book that I have, you can get it at TFNN, introducing the Chapman Wave methodology, I talk about the lowercase h that can go to a lowercase m formation. But if the technicals like the MACD, which is moving average convergence divergence, which is turning down so sharply, and the stochastic trying to bounce off the 27% level, but it looks to me like it's going to go more sideways, still under 30% than anything else. My thinking here is that based on, let's go to an even shorter time frame, based on the 10-minute chart, that's probably a peak C failure, 2347.50, pulling back 2343.25. It was a peak D in the Chapman Wave methodology, and let me see if I can find this right now, just to make it as simple as possible. So for those of you who are looking at this fresh, you'll know exactly what I'm talking about. If I can find it, I hope I didn't have it. There it is. So in the Chapman Wave methodology, a very simple technique that we look at is to identify the lowest low bar and merely count each successively higher peak. When you get to the fourth highest peak, they're alphabetized, uppercase letters on the upside, lowercase on the downside to show very quickly a trend. When you get to that D, other things can happen. Just keep it as simple as possible. It could recycle up to a brand new buy mode. It could make just a squeak to an E and then pull back. It could have the deepest and sharpest pullback. It could go sideways. But D, the fourth highest peak, that's where the yellow light comes on. You put your foot on the brake just gently to say, hey, I've got to slow down here. Okay, so now let's get back to our nitty-gritty. And I'll just tell you while we're looking at it, a break into the 2344s today, anytime today, would be a positive occurrence in the E-mini. A slide under 2338 will probably test the low that was made of 2336.50, and that would be a negative and suggest we're going to go even lower. All right, let's get out the way now. We're on to the new thing. So that's the 120-minute chart. Now let me show you something that's even more interesting. Within the technique that I call the Chapman Wave methodology, a very quick peak A to B to C to D, it doesn't matter the time frame, invariably means that there's going to be some kind of a pullback, quite a sharp pullback, not necessarily a major sell signal or anything like that, but some kind of a pullback, except for one condition. And the condition is if D starts to look like it's a breakout, and you could even draw something like, I'll do this here, just as a demonstration, something like a fulcrum here that says, hey, you saw that much earlier. Oh, I don't want to go to it right this moment, but there could be like a one-to-one extension to the upside as an incredibly forceful breakout to the upside after just merely a mini sideways consolidation takes place. That's why I'm saying we've got to see what happens at the close today. Why? Because of the weekly charts, and let me show you why. INDU, the Dow Industrial Average, is making a probable peak D now if it doesn't go above 20,639, the high of yesterday. MACD is good. Stochastic is 97%, really good. So I'm just thinking of this as some kind of a pullback. So we took a position that I actually have a target to the upside, and we'll see what happens if we remain in it for the day. What's important here is that this leg D has just snuck above the trend line of resistance. The MACD in the weekly chart is good. The stochastic is at 97% in a weekly chart. That is outstanding. But the monthly chart is 94%, and the MACD is good. So it's the short term that we're looking at here, and we've got a peak F in the 120-minute Dow chart. And that makes the close today very important, because if it closes nearer the high, that's a really good close. If it closes towards the low of the day and the Dow goes down towards the 20,000, say, 520s by the end of the day, that's saying to me that a down close on Tuesday could suggest that we might be making a peak here in the weekly chart of D. But the reason why I'm making a fuss, let me go through these now. Look, S&P, same thing. Probably a peak, probably, we don't know, but probably a peak D today in the daily, good technicals. Leg D, but if there is a poor close, then all of a sudden you're looking at the daily leading, well, it'll be the 120-minute chart, leading the daily, leading the weekly, to have no new high next week. That's really what I'm saying. And that's it. Sideways consolidation, 2342 right now, down 4, but 2287. Way down there is the 9-period exponential moving average in the weekly. But look at the QQQ. See this little candle, this tiny little doji candle? If there's a close today above 12963, that's actually a positive. And that says, yeah, it can go a little higher and then pull back, but you've raised the base. But if it closes towards the low of the day and still has an inside bar, that says, hey, be careful, because if there's a close by Tuesday below 128.92, that's in motion some kind of a pullback, and that concurs with the 120-minute chart. IWM needed a leg D. It got the D. It's looking like a peak D, and it's only in a C in the weekly chart. So this is going to be very interesting. Let me go quickly to the gold. Gold now is down $1, down $2 at $12.39. It looks like it just wants to touch the 1246.60, just above that, to make a leg D, and then I think we can pull back a little bit. And that takes us to the dollar, DXY. The dollar right now having a nice bounce, having made a leg C, a peak C. It looks to me like the dollar could be doing exactly the opposite of what the gold is doing. And in fact, the dollar could have a little bit of a test, and maybe try for the 100 and 1.10 area. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Let me just clarify a couple of things. So the pattern, I want you to show the pattern because that's what this is all about. Look, the pattern that I'm looking at in gold is that the gold could go like an H pattern right here. And if it doesn't close decisively, if it has one bar, maybe it can close, but I'm guessing that it won't close. It'll go above 1246.6 maybe, but it will close under that. And if the technicals start to fail, which they seem to be doing right now, that'll be a Chapman Wave right shoulder failure of the drop bucket pattern. And I'm looking at that and saying, unless gold decisively closes, I want to see leg D. I don't have to, but I'd like to see it. I'm suspecting that gold could go to the maybe 1249, just slightly higher, and then close below, and then we've got to watch it real closely. And that would be the comparable pattern that I'm looking at in the dollar, because you've got to remember that this administration might not be saying it, but it has been stated before by the president that what's with the dollar being so strong? I remember him saying that. So I don't know what that implies. Hey, dollar needs to come down. But there's going to be pressure, but that tells me that the dollar could maybe bounce, and it too could make this kind of a U-shaped pattern, and we're watching to see if it makes a failure pattern. But in the meantime, I've got that arch already drawn in the weekly, and I had said I drew this in before. I put that arch formation, and I thought, okay, there could be a bounce, maybe to the 101.70s, maybe 102.10s, and then I think it pulls back. It didn't quite get there. It went to 101.76, and now it's down to 100.76. So I think a lot depends on Friday a week, not this Friday, but a week from today. That's the issue. Now, I had a question in the den there. There wasn't a question, two statements. Terry says, do you adjust your thinking for options expiration, Basil? And in me, this is at 1113.22. Folks, the den is a wonderful medium. You should really try it out. And then P in the den says, at 1113.25, 3 seconds later, so he was typing before he even saw Terry's, and he says, does option expiration impact your charts following week, Basil? Really good questions. So number one, it's in the back of my mind that there's an options expiration. I think yesterday at the close, towards the last half hour, that was what you would have seen today if it didn't happen yesterday. I think it's done. I think the selling pressure is going to come in. I could be totally wrong. Look at my 120-minute chart. Let's just get there again. Look at that arch formation. That's what I'm thinking is going to happen. I think it's going to be a peak C minus in the 10, peak D in the 5-minute E-mini chart. Look at the MACD stochastic, not very strong. I'm saying to you that if the E-mini breaks 22336 support, we could close towards the low of the day. We'll see. Day's young, and it is options expiration. But I've been looking at this for quite a while. I mean, when I say quite a while, I'm talking about decades, because I used to trade options a lot. My thinking here is that a lot of the time, the Monday and Tuesday after options expiration kind of keeps somewhat of the upward mobility, the upward support to the markets. But I've also got a feeling that we have kind of run out of that unless by Tuesday we're breaking into new, really strong, Tuesday, Wednesday, strong high ground, I think we're in for a choppy sideways move, slightly lower lows, slightly higher, lower highs, and that we're going to see some action in the volatility side of things. That's really my thinking. So I hope that answers you. Thursday often took out bear stops. Yeah, they took out the stops, and yesterday, that's what I think happened. That's why it was a little difficult to get in, and everybody's now so afraid of being short that's what you want to see in the market. You want to see the fear not represent. It was represented a little bit in the volatility index, which is at 1201, up 25 cents. But yesterday, this is very interesting. For 2 days in a row, the VIX index was up. Even though it closed way off the low yesterday, it was still very strongly up. And that was saying to me that there's a hint that buyers are coming, but I still think that the buyers are shy. I think they've been hurt so many times. You can imagine this. Look at this. If I go to the TVIX, which is the vehicle we sometimes trade, it's the 2 times long, the VIX index. Is a horrible, horrible vehicle. But if you get the timing right, it's fantastic. If you get it wrong, it's just, what is the opposite of fantastic? Unfantastic. So when you're looking at this is the first time that I'm actually looking at the MACD starting to climb for a while now, big divergence. And the stochastic has a slight divergence to the upside. A bear phase has to have bad news, the market perceiving news to be bad. Therefore, selling pressure increases as the volatility index rises. But until the VIX index gets into the 13s, we're not going to have selling pressure sustained. It needs to get there, and then all of a sudden you're going to see triple-digit moves that possibly could close at a triple-digit low. Okay, hope I helped you there. So now we're looking at crude oil. Crude oil is still in that range. You know, I just spoke to you about it. I don't see anything until the range is broken. What is that? A close below above 55 changes the range to the upside preference, and on the downside, a close below 52 to 51 support. Going under that, all of a sudden you've got yourself a big arch formation. I've already drawn it in. This is a C so far. I think that the C is going to fail because it's underneath the previous major high. This is being smoothed out. That's why the prices always change, the letters change. The high was back in the week of the 10th of June at 57.44. Yeah. So I'm looking at this. I'm saying the monthly chart for me has been a huge heads up to say the H pattern, lowercase h, can go to a lowercase m, and just keep thinking range bound with probably from here slightly lower highs and slightly lower lows. Look at the high-grade copper. I was asked about that. High-grade copper is pulling back after. I'm calling that a peak F for now, probably a peak F. I'm not going to put a sign or anything, F/B, but my guess is that I'm going to be calling it an F. And high-grade copper at 2.69, down 0.02. I think copper is going to test the 2.639 period exponential moving average over the next week or two. That's my thinking. It might not hear me. And if you go to the TLT, this is going to be very interesting. See the TLT, the Lehman 20-year Treasury Bond Fund is rallying. It's up 81 cents at 120.43. I'm going to raise this trend line. Remember, trend line is there just for your convenience. It's a very easy visual calculation of what's going on. So I have no. You want to be correct in your analysis. People always ask me on the ledger, hey, wait a minute, didn't you just have a C there? Why is it now an F? Because I want to get the lettering. I want to get the technicals in the time frame I'm looking at right at this moment. I don't care what I said before. What is it doing right now? And it means that sometimes you have to make an adjustment. You don't go to jail for it. It's not purgatory. being correct is the only thing that counts in the market, and you want to use all your resources to be able to do that. That says to me that the TLT will start to break out at 120.42 if it can go to 121.65, but really it needs to go to 122.30 to take out that peak that was made on the 8th of March. And that would say to me, aha, now the selling pressure as money from equities goes into the stock market is something that we could be seeing. So in the meantime, just range bound. If I'm looking at the, always get a question about the TNX, that's the 10-year, which is really what the banks, this is the one that's really used for the medium of rates and all sorts of things. So it's just stuck. It's on a slightly lower lows and slightly lower highs. It's in the weekly chart just shows that it's making a potential arch formation. That says we've got to watch it real closely, because at this point it's just stuck in a range. It'll break that range if it goes above 25.50, it's at 24.15, or breaks under 23.35. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're going to go to the questions in a moment. Let me just show you that corn, this is the continuous contract, has got an F/C. There is so much that's looking very much like it was a peak F in the corn, so I'm watching it real closely because at 371.25, if it takes out the 368 support by Tuesday or Wednesday, this leg D after a very steady stair-step move to the upside, but nothing fantastic in corn. It says watch out because the 364 level is the 9-period exponential moving average. It would take a move to 383 by midweek next week to really get some strength to the upside. And if you go to the W, that's the wheat continuous. I've got a leg C, probably a peak C here. The depth of this pullback says it's almost the same as the corn. And it looks to me like I might have to recount this because it could be an EF, could be, let me just check, 437, 4/8, 437, 6/8. Yeah, so that could be a G/C. I'm going to put a G/C because I'm kind of suspicious of the move right now. It seems to me that the 200-period moving average is acting as a repellent. I'm watching it closely. I don't have a trade, but I like to look at these as practice charts. There's only leg B in the weekly, so it's a little stronger than corn. So I'm watching this, and all you need is a move to 454, above 454 would be very positive and suggest there will be a leg D, but a breakdown below 444 right now, a breakdown below 438 would say, oh, watch out. Pulling back. Now, let me just, I had a couple of questions. Let me go from the ones that I got first. Tim couldn't hold on. Wanted to know about the IBB trading at 292.93, down 5 cents. I feature this in my opening call every day. We either try to have positions or I'm just watching it. We had huge position to the downside and really haven't done very much at all for a while. And now I'm thinking that it could be pulling back. The MACD is good. Stochastics at 94% and starting to turn down. Unbalanced volume is turning down. I'm just wondering if this arch formation that keeps failing is going to be repeated yet again. And that's the thing. So if one was to think of this, maybe if you're thinking of it as a short, you've got to put a stop above 296.93. That's the high that was made on the yesterday. But if it takes out by Tuesday, if it starts to break down and takes out the low of yesterday of 290, then 288.61 is the 9-period exponential moving average support. So if you're used to this vehicle and it's been showing strength lately because I've been saying there's a rotational correction going on, we're going to be watching this very, very closely because there could still be a leg D to the upside, and that would be at 1 penny above 296.93. I'm thinking that it's more this pattern that goes towards the range. If in the weekly chart, if I had done this, it would be much easier. It just makes it very noisy. I don't like to have noisy. It's already too noisy. I like to do this and show you. This has been the range that's repelled the stock in this area between 290, say 293 and 298-ish. That's where it's reversed almost every time since a year ago. So I'm thinking it could be doing that as well. But you know where the stop is. Just make it fairly tight. That's all. So, okay. I hope that helps you on the IBB. And if you do have it, you can always say, hey, you know what, if it starts to break down, I can increase a short, or I just need to wait. I don't know if I'd use the 3 times a short at this point. I'd rather, if you're going to short it, just short the actual thing. 1% risk is really all I would take in that. Okay, now let's go on. The next question was IP. Al says, I've shorted this. Just short as a second position in international paper at 53, first position at 57. What do you think? I think that's great. It's making an H formation. International paper trading at 52.05, down $1.33. Let me just draw this in. It's that H pattern that I was just talking about a moment ago. This one's for real. I think, Al, you just picked it out perfectly. Peak D in the weekly. I'm putting a down arrow here. And leg C, I'm calling it a leg C in the monthly, at least for now. I might have to change that. No, I can't change it. It has to be a C. It'll be a C minus if it fails, and that's unusual. No, I think you're correct. But I'd be a little careful when it gets to the, if it gets to the low that was made on the 6th of February at 50.60. That's where it could have that left side, right side price time match bounce. So that's what I'd be looking for. You want to see, regardless of whether it stops before it or goes under it, you want to see a decisive move right through the gap. The high was 50.47. You want to see deep into this candle, the candle of the week of the 2nd of December, Al, and then you're going to be very comfortable. At this point, the best case is it makes an H that goes to a lowercase m, so it just bounces around, gets very frustrating, even though you're in the right position. But that's the worst case for you. best case for the stock. The best case for you is that it just goes right through. It follows through downside on Tuesday and Wednesday and takes out this Chapman Wave Roman candle low of 50.60 on the 6th of February. Hope that helps you. Now I want to go to the question I had much earlier on, KBE. KBE is the regional. Oh no, KBE is not. I put KBE as the regional. This is not the regionals, KRE. I wondered why I hadn't notated this. KRE is the regional banks, holding very well. It's down 46 at 57.41, having made a peak C. I'm calling it a C, and a leg in the daily, leg E in the weekly, and a huge leg B in the monthly, going from the 35, 36 area to 57. I think it's still looking quite good. I think there will be a pop-up to a leg D above 58.11. That wasn't your question. I just did that because it's one that I'm very familiar with. I'm going to go to KBE, which I hadn't done for ages. It's the same thing. The reason why I want to look at it is this is the S&P Spider Bank ETF. I said regionals. I have to take that off. I just can't remember if this is regionals right now. The other one was KRE is regionals. And KB is maybe just the S&P Bank ETF. That's all it is, like the XLF. So let me go to the XLF, if you don't mind, Bob. No, that's GT. If you don't mind, I'm going to show you the XLF has the same pattern, but this is in a leg D in the weekly, going to an Chapman Wave inside track resistance area. It's in leg D in the monthly chart. I'm using this as my benchmark. And I'm just saying to you that higher rates, and the rates sort of are stalled right now. The TLT is actually rallying. Rates are coming down, as I showed you before. So just keep in mind that, yes, there could be one more pop to the upside to 24.57. But we're starting to get into a very strong area of resistance. I think later on, we're going to see the XLF spike into the 25s. I think right now that has to wait, but the stochastic and MACD and the daily are still very good. So I would not be shorting the bank stocks. You don't want to short one of the strongest area. Question, I did the copper before, but the FCX was a question. FCX is, look, in leg D to leg C to the downside, having made this has to be a peak G on the daily. This is probably a peak F or C in the weekly and a leg C in the monthly. All I can say is that FCX, Freeport McMoran, is trading at $14.89, down 18 cents. Since it made that high at about $17, it was what, $17.06 on the 24th of January, it's had lower highs and lower lows. My thinking is the big test comes with this candle of the 13th at 14.51 as the low. Let's see what happens. Technically, on the weekly basis, it's had the daily technicals are very poor, but the weekly technicals have held quite well. I'm thinking that the weekly technicals are going to fade a little bit here, so I need to see how FCX holds this candle right here, the candle of the 13th. Hope that helps you. We'll be back with questions from Bob and Sarah and Julie straight after this. Basil Chapman, Tiger Conditions Hour. Dow's down 70, S&P is down 6. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So the next question was CLF. Well, first of all, XLE is failing. It's got the H pattern that we're looking at. The S&P Select Energy Spider Fund made a peak E in the weekly, leg C, peak C in the monthly. I'm thinking that at 72.78, down 52 cents, the XLE is going to test the Chapman Wave Roman candle wick and touch the bottom of 70.65, which goes right to the 70.83 200-period exponential moving average. I think that's in the cards. That's where the big test of strength comes in for the S&P Select Energy Spider. When I'm looking at the XOM, that's that H pattern. CVX actually has broken its left side. It was looking better early on, and I've got a C. I said, I think I'm going to keep this as a C. No. This is where you want to go back and say, you know what? G/C with probably a G right here with the MACD and the weekly stochastic down at 63% and a peak D in the monthly chart perhaps unfolding. I've got to watch this real closely. CVX down 1 at 109.67. Not good. It's been the better of the two, but it's now acting a little bit weaker. So just watch out real closely for that. That's CVX. That's Chevron. Looking at LQD. So here's the question. LQD, Corporation Bond ETF. EFA iShares, 6%. Is this a short candidate? What's the waveform, high or low from here? So this is very interesting. Is that correct, LQD? LQD is, in fact, iShares, iBox, dollar inverted, what? Inverted GD, core bond ETF. Inverted can't be gold. It must be good. GD, whatever it is. Is it a short? Is it a long? You know, it's stuck. That's the one let me just keep your eye on this. Let me just go to this one here. See, the TLT has very similar pattern. What would I be doing? If I get the convincing signal that there's going to be a deeper, I'm thinking of this as more a short-term, a near-term to short-term pullback. And then there might be another burst of energy. I just don't know yet. I've got to wait for the Friday close. I've got to wait for maybe Wednesday of next week to see if this follows through, if there's a down close today, etc. So I'm just suggesting to you that if I didn't have a chance to do it, I would have gone to my weekly chart. I'll do it right here. You see this H pattern in the TLT weekly? And you know how I like to draw these? I'm still going to keep it as 1H right now. And it's very simple. If the TLT takes out the 118.32 low of the week of the 27th of January, it's probably going to retest the lows, and that means the yields will test the highs. At this point, I just think it's stuck, and at 122.12, that's a 200-period moving average of the TLT weekly chart. If it takes that out and then closes above 123.14, we're back to the Japanization of our bond yields. Unbelievable, 31 years. So I'm sorry, Sarah, I can't give you a trade. I can just say it's just stuck in a range, and I don't see a trade right now. I will see a trade if the Dow breaks under 20,420 and the TLT has moved up 1.5 points. Then I'm going to say to you, hey, that's a trade, but that's by then too late. So question that then Zuga wants to know, Basil, I would like to start learning your technique. What do you recommend to start with, please? So my CD called Introducing the Chapman Wave Methodology. I'll try to do that during the break, and I'll put it up. That's really the good start, and I've got tons of webinars, but that's a start. And then maybe if you want to just give me an email, and I'll follow up on that. But my newsletter goes through these wave counts every day. Most importantly, if you do want to learn it, I will show you the sequence of how you can do it. And I think a good start is the CD itself. So let me do this. I'm going to go to, that was Sarah, that was June. I've done everything there. There was one more question. Oh, a question about the steel stocks. So SLX, you see, this is why I was talking about the IBB, that if you want to start something here, that's fine, but you've got to put a very tight stop. Why? Because if there is a rotational correction and the SLX, which is the steel ETF, is down just 29 cents at 44.19, having made a peak E/A in the last move up, and a leg D doji potential in the weekly, if there's going to be a rotational correction, it means that there's a really good chance that within the context of going from the least favored sectors to the buying the least favored sectors and then going to the most favored sectors as shorts in this period might be a way to do it. But I'm thinking that there's a good chance that steel is making a high level consolidation because something is going on between the dollar and other things that is favoring the steel stocks. Look at US Steel trading very nicely. It's up 33 cents, leg D, peak D actually, but still leg D in the weekly and the monthly, but holding so well. It says to me that you've got to be a little careful that the favored areas in this January-February period could continue while the ones for the last year and a half, like say the semis, and full disclosure, we have got a short on the semis, but we haven't been taken out. And I can just tell you this, that the semis have held extremely well. They've been the clue to this market. Look at the way they've steadily gone up, walked the 9-period moving average. That could be an area where you've got AMAT, Applied Materials, nice candle today, but it looks to me like Applied Materials, if it does break in at 35.31, if 35.45, if it does break into the 36.80s by the end of next week, we're looking at the chance that this market could just simply recycle higher without so much as a 1-day or 2-day breather. I'm looking at it that way. So that's why that's Emmett. The other one was Intel, INTC, pulled back very sharply from its peak, way down at the 38s. It went down to the 35s and 34s, and now it's at 36.20. But it's just kind of stuck, not doing all that much. So we got to watch that. So to answer the question, the rotation is going to be important. Where do we go? Does it favor the XLK, which is in huge? You see, this kind of move, a single leg, almost like a single leg A up, even though technically it's a gray A. XLK is the tech area ETF. See, this AB is under that D. So in the Chapman Wave, what we do is we make them gray to say they can fail, but if it breaks out above, you've got to treat that with all sincerity. This is an E with a doji, a second doji candle perhaps forming today. So I'm saying, and the weekly chart is in leg C. So the weekly chart is very strong. The monthly chart is very strong. I have to look at this and say, what kind of consolidation? If it goes from 51.96 to 51.54, that's the 9-period moving average, 50 cents, 1%. But really, if it goes to 51.26, then finally we've got a correction going on in this area that has just been on fire. My unbalanced volume is the only thing that's telling, and the 120-minute chart are the only things telling me right now that, in fact, there could be some kind of a consolidation. And I'm calling it near term to short term in the indexes as well, because my weekly charts and monthly charts just are too strong to be able to make a deeper statement. Just like someone had said, cyclical inflation upturn from May to June last year, helping all cyclical stocks. Absolutely. And you've got to include the banks as being part of that cycle. I'll be right back. Basil Chapman, target conditions are Dow's at 61, S&P's down 5.5. We'll be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So I was asked about MON Monsanto trading at 108.91 up 42 cents. Stocks that are acting well right now, that's a good sign, except this has kind of done its work. It's gone sideways, and it's at 108.91. If it's able to get to the 110s, it can make a double top at that previous peak, the peak F that was made around about the 24th of January. But if for any reason it takes out this low right here, that's at 106.90. If it goes to 106.50 and holds, not a good sign. So this is kind of in an area where if you're looking longer term, I think longer term Monsanto has a nice looking chart. So if you've got a position, I would not do anything there. I would say just make sure that if it closes under the 107 area, you're starting to maybe lighten up a little bit. But boy, if it goes to the 110s, there's a real good chance A, B, C, D. This is a quick D in the weekly chart. That means it's taken just weeks' time instead of price to consolidate, and that would be a good sign. And say above 111.06, you start. There's no resistance until you get to the high that was made at 114.26. Hope that helps you. So Here's what I'm looking at. Where would you add longer term? Where would I add longer term? I would have to wait a longer term because it's longer term. I just have to wait for a test in the low 108, 107s, see if it gets there. If it starts just to move from here, I would, if you're already in a position, then I would add 1 penny above that high of the 15th of 104.47 and 104.48. I'd add a position and I'd treat that as an intermediate term potential using time and saying, I've got the time, I'm going to give it a 3-point stop, but I'm really looking at the monthly chart going to the leg C above the 114.26 high of June of last year. That's really how I would look at it. And that position, as I say, 3-point stop on $110 stock, I don't think that's a big risk. It's just under 3%. So I hope that helps you. Now let me just do this because I need to show you. We were talking about the steel stocks. We're talking about the IBB, but there's another area that's acting pretty darn well. This is the XLV. We own the XLV, just to be clear about that. It's the S&P Healthcare Spider Fund, and this is why I'm saying that we could be seeing in this particular phase right now areas that were really under intense pressure, and was that intense pressure from the 76 level to the 66 level, 30-something percent, about a 30% decline from way back last year, summer, going into the fall, a real fall. But now you got that triangle in the monthly chart. If the XLV is able to get to the 75s in this market condition, this scenario that we're looking at right now, I'd be quite impressed. I'd say that's really good action. Even though it's made a peak D daily, that would say to me, you know what? These areas that have been working over the last 2 months or so are some of the areas that are finding strength on this pullback right now. So I hope that helps you about that. So let's just make it clear. We'll be back on Monday. Have a wonderful weekend. I'm just going to show Merck because there was a question on, why is Merck not? This should be notated 10 times, at least 20 times in all the years. A, B, C, D, E. It's in leg E in the weekly and monthly. The reason why I like it at this level is that it's under all these conditions, Merck, MRK, has held beautifully. So as a stock, if you're holding it, I say just keep holding it. Add to it. I just can't say that. Maybe next week I'll be able to say where to add. Right now, it's just one of those stocks that's defied the down moves. It just keeps going up, even though there's talk about the pharmaceuticals, etc. Hey, have a wonderful weekend, a wonderful holiday. The VIX index is at 11.88. If by the end of the day there's another sell-off and the VIX actually goes above 12, that could follow through into Tuesday. If in fact the VIX at 11.88 starts to pull back under 11.70 as the Dow goes only to a minus 35, S&P goes to a minus 2. Wow, that's amazing action. I think we're in for a week of week.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,